Hello, ladies and gentlemen, and welcome back to another video. I hope you guys are having a great day. First things first, this is not financial advice. Anything I say in this video is strictly opinion only, and I am most certainly not a licensed financial advisor. With that understood and out of the way, let's get into the GME stock update. And on Thursday, we had a nice little 5% day on some decent 10 million volume. This is good to see, and I'll show you guys exactly what I think caused this specific pop in price here in a little bit. At first, I wanted to show that the drawing I had, I think I showed you guys for the first time in my Thursday or Wednesday video. This is going to be locked. This is locked in the chart. So I'm not moving this. This is just what I think could happen. It is not financial advice, and by no means would I be making financial decisions off of this. This could happen with some expected fails to deliver settlement that we'll get to, but by no means would this be anywhere near certainty. But I think we all know that in the land of GME that really nothing is certain. But good to see the 5% day. First things first, this is being recorded on a Friday. All you need to do on Fridays, or I kid when I say that, but all I do, I look at Max Payne, okay, $23. GME is currently at $23.45. And I pretty much decipher and assume that GME will not be trading much over 23 to close the day. In the event that it does, that's gamma, and we can pull up exactly what that is on unusual whales. But it's really not something that um, you really need to overthink on a Friday. It would have to be like monumental type settlement or volume coming in for that. Oh, unusual whales is not working. Let's see. It's been a little funky since the AWS outage. Okay, so here you go. Huge call wall here at 23.50. If it breaks that, you're going to hit another one at 24 and then get stuck at 25. So you're not breaking this. It's just not going to happen unless there's some serious volume. Now, Thursday, what happened? Why the 5%? Well, it is directly, I believe, related to XRT creation. I will show you why in a second. For anyone that does not know, the main factor in my belief and other people's belief about GME price and GME price cycles is directly related to this BRNO research paper that I have up here called Confirmation of T plus 35 Failures to Deliver Cycles, Evidence from GameStop Corp. This is a must-read paper for anybody that's interested in the stock. I think it's more important than technical analysis. It's more important than really anything else going on uh, with the equity. Now, obviously, the company's fundamentals are largely important because fundamentals can clean a lot of this shenanigans up. But TA wise, I also think isn't important. But if I had to make a pizza pie, it would be a very small sliver compared to some of the things that are talked about in this research paper. Now, quickly, just broader strokes here. We don't have to do a deep dive into this paper today, but ETF shares, the creation process, of ETF shares involves the buying of all the underlying securities in their appropriate weightings to reach creation unit size, ranging from roughly 25,000 to 600,000 shares per creation unit. After creation of the ETF, in this case XRT, the authorized participant AP delivers the securities to the ETF sponsor, and in return, the ETF sponsor bundles the securities into the ETF wrapper and delivers the ETF shares to the AP. What am I talking about here? Well, if we go to the GME chart, which is being updated by someone on Reddit, and in this far right column here where you see 6.29, that is XRT. So from Wednesday, they went from 3.31 million shares outstanding to a whopping 6.29. That is the largest in some time, almost a full calendar month. So that's a very sharp and sudden increase. They are creating XRT. So per our Bruner research paper, that block right there, that is probably XRT creation, meaning they had to repurchase some of the underlying in order to fulfill obligations. Now, of course, they do it on a Thursday. They don't want to do it on a Friday because Friday, you end over Max Payne. You have people exercising options for delivery T+1. on Monday, you see a spike at 9:30 or soon thereafter before a little gradual sell-off. That's usually the process involved here, and I think that's a good explanation for what you saw on Thursday. Now, the FTD cycles that I was alluding to earlier, I will show you as well. That helps to calculate my estimations here. And again, these are just estimations. I can't say that enough times. I've seen people buying calls off of this. I have done that in the past too, but it by no means suits my style. I prefer to accumulate shares 100% of the time. Options environment, I will play leaps, which is longer dated calls if and when IV gets to a certain point. That's really the extent that I like to do options in. I will put smaller amounts on shorter dated calls occasionally when I see something I might like. But again, this is just data. They can kick the can. We've all been around the block. But let's just look at a few numbers here. So you see in the middle column here, this is FTDs on the right-hand side here. And the dark red is a lot of cumulative ETF FTDs. So this is across various ETFs that contain or once contained, in IWM's case, GameStop. And you can see when there's a high quantity of volume, I typically look at those exact dates and then go out 33 plus trading days for an idea, of when you can see price improvement. So could we see some starting early next week? Yes, I do think so. And I will show you. So off GameStop earnings, let's go here on September 10th. We had a big block of FTDs on ETFs, excuse me. I wonder why. Certainly no relation, right? So let's go look at earnings, T plus 33. So you have Monday, the 27th. So that's kind of when I would start to expect some price action. You also have the narrative with the Fed and FOMC next Thursday. CPI, everything looks good. It's soft. I think we're going to see 2 more cuts this year. Again, ask Jerome Powell. Don't ask me. We can just react to what the Fed actually does. Could that trigger anything with GameStop? It could if there is an interest rate related swap, but that would be lesser degree. I would be more looking at this settlement off of this big block of FTDs all around this price range. The bulk of them fall in the week beginning Monday, November 3rd. And then secondarily, I wanted to highlight two kind of broader picture for you guys, but T plus 33 off October 17th, which was a massive OPEX, could be the same day as earnings if Ryan Cohen decides to play it like that. So you could see one of these more kind of sporadic after hours, huge buying pressure there. So that's another thing to watch out for. Now, off of these type events, how high can GameStop go? It largely depends on the amount of FTDs that are all packaged together. I typically, and again, if you're just looking at the chart, you're not looking at much as the data. Just look what happens when, let's say, GameStop gets over $32. Let's draw a line here. So $32. Well, let's count the amount of times this has happened in the last little bit. It happened in May and was above 32 for two trading days, 1.5 trading days, really. It was above $32 and then came right crashing down below. In December of last year, when Roaring Kitty was still active, occasionally posting some memes, it was above 32 for 1.5, 2, 3 trading days, 3.5 max before you got the cat ears and a dump here into swap season. So, recent history wise, and then you had all the Roaring Kitty stuff from back here when he was back in May and April of 2024 and early June. It doesn't happen very often. And in those events, I always personally like to be prepared for Ryan Cohen to do one of a couple of various things: an at the money offering, another bond offering, preferred share offering. This last time in earnings, he did warrant dividends, which is a form of dilution, as we all are aware, as long as people are exercising those when they come to expire. So that would be my thinking, that Ryan Cohen would do something like that. Now, in his interview recently, obviously he was talking about, waiting for a pitch down the middle, the perfect point in time for GameStop to do something with the capital. I think that's all well and good, and I think that's really quality advice, and kind of a no miss scenario. Obviously, it's still in, any investment, any M&A has a degree of risk to it, of course. But in a crash like scenario, that would be, really good to have cash for. And he is authorized per a shareholder agreement to dilute more. So that is a possibility that could happen if GameStop has enough FTD cycling to get above that price point. Now, $30 too, there will be options gamma and it will hit if this happens. So, when these things do come into play, and we can look at an interesting options trade actually from yesterday, that's always going to be the case. It could happen. But, Ryan Cohen has been pretty quick on the trigger in a volume related event to add some shares to the total outstanding. It's a nice way of saying it. Borrow wise, lend pool, very good to see. So they are continuing to borrow GME shares. This can happen per the BRNO paper to clean up FTDs. They can go back and say, oh, hey, we actually do have shares. We don't need to buy any more. Look at this. So you can see that. That's why when the lend pool drains, it's a very good sign, especially when FTDs are set to hit, that things are going to get a little crazy or a little spicy, if you will. XRT, they have restocked it quite a bit to 800,000. They're borrowing more here, likely just FTD covering on a Friday. Don't want to have too many obligations. And then GMEU is the other culprit, the other suspicious one. I like to look at. The borrow fee is still so bloated, but they found 55,000 shares. We're going to likely see a creation block on GMEU happening as well. Now, why does this happen to GME and other stocks? I should make a full video on that. I actually do believe that DJT, and for transparency, I'm 100% invested in GME. I think this is now going on with DJT as well. And part of me is wondering, going back to Roaring Kitty's timeline, which seems like ancient history at this point in the saga, but his American flag mic, I wonder if that was in reference to DJT. It could be. I don't know, but I believe from some things I'm looking at that is also happening there now. You can see they created one of these scam ETFs. Excuse me. I don't know what that was there. For DJT as well. Look at the borrow fee. This is a same T-Rex product, daily double long BS fund. Excuse me. But you can see the borrow fee for that. Upwards of 34%. The thing's a disaster. Look at the fails to deliver. Massive, 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 massive. How are they doing it? It's a magic trick, but they're doing it. I believe you're going to see some of this ETF creation redemption cycle on DJT as well. But point being, for GameStop specifically, I like what I'm seeing. I think there's going to be some settlement coming up, which again could be totally wrong. How do I personally, I wanted to get into this a little bit today too. How do I personally take advantage of this? Well, it's difficult, right? Because I could sit here and say, well, I'm going to buy calls, expiring on November, let's see, what would this be? November 14th, maybe, to hit that, have a little bit of runway, a little bit of extended time. I could do that, but that's far too risky. And theta, every day, theta is decay, basically, for options in the Greeks. Every day, every minute, every bar that passes by, unless GameStop is rocketing upwards, you're going to theta decay on those options. So if you got to fill at 45 cents today, on Monday, literally over a weekend, it will theta decay. That could be worth 40 cents when market opens, depending on price action. It could go all the way down to 20 cents and you'd be down 100% on your trade. So I don't typically like to hit short-term options. If IV, like I said, IV gets low out here in the summer, when GameStop was just a disaster for what felt like 2 or 3 full months, I did take leaps into 2027. Again, that is just super safe and in the money as well. I bought the 20 strike there. Would I unload those if GameStop does go up here? I would. I probably would. I would take that cash pile, ideally, right? I'll just walking you through. This is just my train of thought. Take that cash pile if this happens. It might not. Take that, keep the cash sitting there. Maybe buy cash secured puts at an area down here at a strike at 22.50 or lower that I would be comfortable picking up shares in, or just sit on the cash and wait for GameStop to get back down into the low 20s. I don't really grovel over picking up shares between 20, 21, 22, 23 bucks. It's really a range that I'm comfortable buying in. Kind of no matter the, cent, the exact cent amount. So that would be my thing. The other part is, would I sell covered calls on my shares up here if this does happen? Sure. Absolutely. If there's if there's demand in the market, if options prices are elevated, I would absolutely sell covered calls. And if my shares get taken away, here or here, if these spikes are of any significance, um, that's probably a price that I could be willing to let them go at too, to eventually buy them back down here. So that's kind of my thinking. And again, I know that, and let me know what in the comments too, if you have a particular way that you like these things or you've been playing these things. I've mostly just been sitting on my hands with my shares, accumulating when I, one, have capital, and two, when GameStop's in the low 20s. I think, longer term picture, and I'll make a full video on this, I think, over the weekend, but the sky is the limit for GameStop. Everyone has kind of been talking about this transformation story of the business for years, and it is now just in the infancy of materializing. And I think Ryan Cohen actually made a reference to baseball again when he said, are we in the second or third inning? I think when talking about, I think that was in relation to maybe a market pullback or maybe GameStop deploying their capital, but this is, I think, symbolic of where GameStop is too. It's a early stage turnaround story where fundamentals in quarter after quarter, the reports are looking better. It's now just a matter of when and if GameStop can deploy this capital at the right time for another revenue generating part of the business, and that will ascend GameStop. Then you'll see the floor of GameStop rise to somewhere much more palpable, maybe early, low 30s, whatever you want to say. And the other point that I come back to frequently is I look at the uh, expiration on the bonds and the warrants, and then the strike price that those trigger at. And $32 for the warrants in October of 2026, I think that's a feasible area that price should be in that point in time. And then the warrants, you have institutions and bond traders buying these warrants for the right to get shares in the high 20s, 28 something, 29 something, or low 30s. That should indicate that that's what institutions are forecasting for GameStop as well, which is very ultimately healthy for the business. So I hope that video kind of shed some light on what this 5-6% candle is, how it happens, the mechanisms behind it. And, the last thing that I'll kind of put a bow on this and say is that these days are amazing. They're exciting, but the fact is they still were able to slam GameStop down 20% in a swap, and we just recovered, 5 or 6% of that. So hopefully we see just as quick snapback price action. I always like to keep my expectations tempered. I always like to be thankful what I have and not look for a quick options win or a quick double my money. I think that's a quick way to double losses as well for my personal thesis. That's just me. I don't judge people that do that. I just don't want to see personally anybody get burned, and that's why I'm not offering financial advice, just kind of going over my thoughts on the matter. So hope you guys have a good one, and I'll talk to you again real soon.